Good morning, one and all, and welcome to this morning's video. So this morning I have two pairs on watch, and those are Aussie CAD and Aussie Kiwi. So I'm going to start with my favourite of the bunch, which is Aussie CAD. Two low risk positions for me today, but I slightly prefer the Aussie CAD position. So without further ado, let's break these pairs down for you now. So on the higher time frames, on the daily chart, okay, we have this low here. We come down. You can see we near missed that low. The buyers get trapped in too early. It comes down, price comes down, washes all these buyers out, taps below here. It doesn't just wick to it. We break through it. Bargain area of value for a buy for the bigger players. We move up. A little bit of strange price action to start with. Come back down. Move up, create a bit of a base there. Okay, price comes up. We tap into this area here by way of this 1, 2, 3 kind of reversal structure. Tap into that, move to the downside. We then come down, break just below here, the base of this sharp move. There was a sharp move down followed by a sharp move up. We kind of wick below it. Okay, we trap the buyers in too early again. They get washed out. Bargain area of value for a buy. Move up. We get that strange we get that strange price action here. We get the same thing here, just on a slightly smaller degree. We move up. We have the reversal structure again. 1, 2, 3. We tap above this area of consolidation, which caused this runoff, caused price to smash through these lows, suggesting there's a lot of liquidity. We come down, we tap into that. At this area, because we had this 1, 2, at this moment in time, when we were down here, I was still anticipating that maybe this wick was just the start of a larger flag to push lower to take us down to here, but we didn't do that. Bargain area of value for a buy again for the bigger players. We wick below, not just two. We wick through. We push to the upside, and now you can see we have a lot of aggression coming in. If we just zoom out to the weekly chart quickly, look how the weekly is looking now. Okay, we've retraced all of this candle and over 50% of this move down, suggesting a move to the upside. A simple move to take out this high here. Okay. So what I'm looking for now is, if we've blasted to the upside, I'm just looking for a consolidation to push higher. I've just noticed that alert there that doesn't need to be there anymore. So I'm going to take that off. Okay, so we've only got the one alert now. So all I'm looking for really is an impulse correction continuation to push higher to take out this high. Now, are we getting the consolidation? Well, let's zoom to the lower time frames. So the first question I'm asking myself is, am I well positioned on the higher time frames for a move to the upside? Well, yes. If we've broken above this consolidation, we've broken these lows. We have that 1, 2, 3. We've impulsed up. If we get a consolidation here and I was to look to get long, would I be well positioned for a move to the upside? Yes, that's a tick. Are we getting that consolidation? Oh yes. What do we know? Consolidation. Okay, and when I did my forecast last night, I was anticipating that we may, so we have that base there, we'd come down, we may near miss that area, FOMO channel. If we just zoom in, you can see that's what's happened. We've had the FOMO leg, we've got close to there, but didn't quite tap into it. And we've consolidated above this high, okay? We've consolidated above that, suggesting there wasn't enough liquidity there to push price to the downside. So if I just zoom in, I'm asking myself, well, now am I well positioned on the lower time frames for a move to the upside? Well, yes. We've broken above here. We've got the consolidation afterwards. All we need is that follow through, an entry, which will give us the follow through to continue to the upside. Okay. The next thing I'm looking at is, I'm asking myself where price started to impulse. Okay, so we have this kind of corrective move up. Then we start to kind of impulse from here. Okay, so now I'm measuring this impulse, and I'm assuming that the continuation leg out of the correction would be of a similar length, which would take us up to that area. Okay, and if we were to measure it on the break, let's say we don't know where the break is at the minute because it hasn't fully formed, but that would take us up to there as well. So that makes contextual sense. I'm asking myself, is the sequence okay? Well, we started off with a bit of a running channel, but at no point does, if we just measure this, okay, at no point do we pull back more than 50% of the range. Okay, so I'm satisfied that the sequence is okay. Okay, and this would be enough volume if it was to form to give price the legs to move to the upside. Okay, so I'm satisfied the sequence is okay. So what I'll be looking for is what I've drawn last night. If we get a 3-touch 1 hour continuation or a 2-touch 1 hour continuation with a 3-touch structural approach. So either we get something like this or we get something like this, where we get that. Don't worry, I haven't fallen asleep. Or we get something like that. So we get the first low and then we get the 1, 2, 3 leading into it. If we get something like that, or just a straightforward 3-touch, then I would filter this. This would be a 1 hour correction because I would be able to see the structure on the 1 hour. So what I would do is if we got a 1 hour close in this area here, I would then drop down to the 15-minute chart to look for entries. You can see that we may be starting to get that now. We kind of have that 1, 2. Okay, we may get something like, just looking at how this is forming, we may get something like that. Okay, where we get that, and then this becomes the middle section. We shall see. But if that happens, then we get the 1 hour close in that area. Then I would look to get long from the base of that structure, and then if we just zoom back out again, this is where I would use the mechanical management tool. So I would measure from this range here to there, and then I would set a take profit there, which just so happens to line up with this consolidation where there was a sharp runoff, and that would give us something in the region of 9.5% to work with, depending on the size of the stop loss. So that's what I'm looking for. I have the alert set just to see if we come down to the base there, the base of this structure, and if it doesn't trigger, then I won't be looking to place a trade. We could get long on the break, but then that would seriously compromise the risk to reward. Okay, we'd have something like 2.5% to work with, so that wouldn't be worth my time, because you don't want to just be able to get your risk off the table. You also want to be able to lock in some profit as well. Okay, so that is Aussie CAD. Aussie Kiwi is kind of a little bit of a hedge, but on the Australian dollar, but you kind of have to trade Aussie Kiwi a little bit independent of what else is going on the Aussie and Kiwi pairs. In the same way that Euro Pound is a bit of an entity within itself, it's its own kind of person, as it were, or own currency. So if we just zoom out on Aussie Kiwi, so on this one we have this clear area of value here. Okay, but once again, you may be noticing a pattern here. We do kind of break just above this, but we only kind of wick slightly above it. And often when we have such significant standout areas of value, which are visible on the weekly and actually visible on the monthly as well, as we've discussed now, as I've said many times, we usually break above. We don't usually just pierce above ever so slightly like that. We usually get more of a, if we are going to pierce above, it's usually more like that. Okay. And you can see we've done that. We've pierced above. Okay. Now, I am mindful of the fact, because Aussie CAD is going long, there's always a chance that we may get something similar where we get something, something like that, okay, which takes us up to these areas to take out this high, which this high near miss 2, okay. But obviously that would take, if we got some kind of consolidation like that, it would take quite a while to form, as you'll see when I drop down to the lower time frames. But what I am interested in is a potential short-term move. You could see that we have this corrective move up there, okay, and we near miss to it. So there's a potential. So if that larger flag, which I was just talking about, was to form, I'd want to see something, more like that. And if you just count the candles, that would obviously take a long time to form. We're on the 4-hour chart at the moment. However, there may be a short-term move back down to take out this low, the base of the structure, which this low near missed 2. And one of the reasons that might happen is because this low failed to tap this, okay, failed to retest the back end of this. So we may be getting a move down to take out that low there and retest the back end of that, and then we move to the upside to take out that high above, which that high near missed too. Okay, so then I asked myself, well, would the risk to reward be worth it? Okay, so I don't want to. If I was to look to get short up here, for example, you could easily be trapped in. You could be tagged in, tagged out, and then we end up with that bull flag to push higher, which I was speaking about. Okay, but but if we were to see more of a solid impulse down, so if we completely push back down within this structure, okay, that would kind of negate the possibility of that larger flag to push higher happening. Okay, so if we got to push down to here, for example, I would be satisfied that we've washed out all the liquidity, and that's not a larger bull flag to push higher. Okay, so would I be well positioned in this area for a move to the downside? Well, yes, down to this area, I'd be well positioned. Okay, would I be well positioned on the lower time frames? Whoops. Would I be well positioned on the lower time frames in and around this area for a move to the downside? Well, yes, because we would have washed out all that liquidity and negated the possibility of this becoming that bull flag to push higher. What does the sequence look like? Well, at this moment in time, I'm measuring the impulse down. That's a 50% pullback. At no stage at this moment in time have we pulled back more than 50%. I'm satisfied with 60% pullback on a pair like Aussie Kiwi, because it does tend to pull back about 60% of the move. So all of these corrective pairs tend to do that, euro pound, etc. From time to time. So I'm satisfied the sequence is okay at this moment in time, but because we're moving down quite correctively, this is already looking at, although the sequence is okay, this corrective move down, particularly given that this corrective move down happened during the Asian session, a lot of this, well, from here, it's kind of corrected down. I wouldn't be surprised if that larger bull flag forms like that to push higher. So I would, especially if Aussie CAD is pushing higher, but which you'll see. So this is a bit of a hedge. So what I've done is I've set an alert there. That should be a bit lower. I think I've accidentally moved that. Let's just put it below there. Okay, so if we push down, we get that solid impulse down that I was talking about. And I would be satisfied in this instance with and we may get something just to touch on it, which is, gives us a correction just to the right of this correction, which will give us a kind of mini head and shoulders, if you like. If we got that solid impulse down, then in this instance, I would only be looking for the risk entry within the flag. Okay, the reason for that is simply because if we took it from the break, that would only give me a risk to reward of about 3.5, and my minimum is a kind of 5. I mean, you could take that and you could say, well, it could keep going, but looking at this structure, that's not the sort of that's not the sort of trade that I would anticipate. We've come from an impulse up, okay, so it's not really the case that we would just suddenly. It doesn't make contextual sense. It makes contextual sense for a move down to here to then move to the upside. So therefore, if that was the case, the risk to reward just wouldn't be there. So So I'd be looking specifically for the risk entry within the flag just to give me the maximum risk to reward. Okay, if we were to get something like that, that would give me a risk to reward of about 7.5%. And the reason I'd be targeting this low is because if we measure the range from there to there, okay, the 90% area would take us down to here, and there's a sharp move just before that. So we have the sharp move down, sharp move up. That is where price could pull back about 50% of the length of the range, even if it was to then continue down to this low to potentially take it out and then move to the upside. Okay, so just a kind of short in and out move this. And that would give us something in the region of 7.5% to work with. We probably could get a 10 pip stop loss on this pair. So that's just a bit of a hedge. I'm not necessarily anticipating this one to shape up, but it's just a little bit of a hedge play. So that's what I'm going to be looking for, folks. I hope you've enjoyed this video, and I will see you again in the next one. Thanks very much indeed for watching.